Alright, hello YouTube. Welcome to Trade Journal episode 8. We got some music going on. First time we're just gonna go ahead and try that out, see if you guys like it. So let's go ahead and just take a look at the chart, the graph, the capital, portfolio. We're at 2,672 to end the week for last week for Friday. So we did recover almost everything and then we lost it all. So you can see we went from 2,685 up to 2,903. I don't think it shows the full picture actually. But at one point I was up almost $250. Now, this made me think about a few things. Okay. It's making me rethink my strategy. Telling me that my strategy is it's a little loose. My strategy is a little loose. Okay. I love the idea of hedging contracts. But as you can clearly tell, I am not doing it in a way where I'm profitable. Okay? I know myself and I see that I'm holding trades for a lot less time than I should be, and I'm not hedging aggressively enough, or I'm not taking profits aggressively enough. So let's go ahead and just take a look real quick. So we bought that contract for, there was a long call, 580 long call, January 17 expiration next year for 1927, and then we came over here, we sold it at 1905. We also did sell a 587 call for I think 42 premium, as you can see right here. 587 expires tomorrow. It's down to $3 premium, so that's a lot of profit. I ended up also buying the 512 or the 588 for $12 to take in or reduce risk on the trade. So all this right here, this is all profit right here, as long as price stays under 587. Sorry, we're on the wrong graph. Stays in the 587 on the SPY chart by tomorrow. So we'll go ahead and we'll just, for the meantime, we're just going to go ahead and set an alert. So if price hits 587, we're closing that contract. Guaranteed. So by loose ends, what I mean is my strategy, essentially what I'm doing is I'm trying to buy contracts with at least 2 months expiration, maybe more. Eventually I want to be able to buy leaps. That's my strategy. That's the long-term strategy, but with my account value and the amount of money that I'm bringing in, I need to change it. I need to be a lot more aggressive with the way I'm taking my profits. So what I'm going to start doing from now on, and for now on, just until at least I see my account growing, I'm going to just be buying 1, maybe 2 contracts long, and not hedge by selling or hedging by selling a covered call or a covered put. Not doing that. And if I am going to do that, it's either going to be the same expiration or something more aggressive, or something as aggressive. But in the meantime right now, since I don't have a strategy or a plan for that exactly, I'm just going to be selling the contracts. There's a possibility that I may move my contract count from 1 to 2. So instead of buying 1 long call, I'm going to be buying 2 long calls, or buying 1 put, I'm going to be going into 2 long puts. This way, if price does hit my first target, I sell that first contract, I leave a runner, I hedge that runner. Go ahead and move on to the chart and just see where we went wrong. Alright, so price, we bought it, I don't remember where we bought it, somewhere around here, 579-ish level, I remember, if I can recall. Price came up, price continued up, 584. I even saw what's known as the Lee test, as Bueller's group calls it, right? So we can even look at the 5-minute chart actually. So we'll go to the 5-minute chart. So we got a higher high, and then a lower low. So what you do there is you draw your fib levels, and then at the 50%, as long as you see price holding this area, you just buy puts or if you have that calls, you take the profit at the calls, and that's what I should have done. I should have closed my call contract, or I had bought in 2 puts at the. I should have bought 2 584 puts that were in the money, and I would have wrote that down at least to 582.5. Ideally, the 161.8% extension level, so the 582.08, which would have been pretty much. I was gonna say pretty much right on the dot of where you want to take your profits, but it's not. Could have taken profits even more. So yeah, so just selling that call would have been the best bet. Kind of pausing at the moment because I'm sensing some thoughts coming, some planning coming, some strategy coming, but I'm not gonna try to think on that at the moment or talk on that at the moment because they need to ruminate for a little bit. If I'm using that word correctly. But yeah, price stayed within my levels, within my zones. That's too aggressive. Stayed within my zones between the 20 period simple moving average and the 10 period simple moving average. So technically, this is still the value zone. So if I want to buy calls again, it would not be a terrible idea if I just set my price target somewhere up here again, and then cut my losses. Maybe this time, since I'm seeing higher highs or higher lows, 4 cents below the lowest candle here. So the lowest point of this candle would be 577.61. So I just subtract 4. So it'd be 577.57. That'd be my stop loss if I were to enter calls. Where would I take profits? Honestly, if you were to break this recent high, I wouldn't be surprised if it came out all the way back up to 586. But if I had one contract, and I bought down here again, which I probably won't be because the market's gapping up at the moment, I'd be taking profit at the top, at the most recent high, because that's the first price target. If I had 2 contracts, still sell that at that first price target. And that second contract, it'd be a runner, and I'd either take profits by selling the contract at 586, or I'd hedge the contract. Just selling short-term covered calls. Honestly, I don't think I should be doing that. I think I should be selling maybe like a midpoint, somewhere between the expiration of the contract and the date of the contract, the contract hits that price target. So let's say, for example, the January 17, and let's say price target I enter tomorrow. Price target gets hit on the 29th. The 29th, let's see, October. It's pretty much the end of October, November, December, January. So it's 2.5 months. So I do a month and a week, month and 2 weeks, a month and a week. And sell a call there. So I said I wasn't going to talk about the contract or the strategy, the take profit strategy, but I did it anyways. I believe I also said that I was going to go over the trading document outline, but between Thursday night and Saturday night, I did have to write it down on my trade journal here, paper trade journal, so you guys don't see it, but I wrote it down. I don't see where it's at the moment, but I'm going to have to put what I wrote down on my paper journal here, and I'm gonna have to write it down on this document because I do need to change my trading plan because I'm not profitable. Again, I love hedging. I love the idea of using Greeks against each other and selling options contracts against each other and buying contracts against each other, but I need to make money first. That's what I need to do. So let's go ahead and move on to AMD. Why am I talking about AMD? It is earnings week for AMD. It is earnings week for a lot of companies. Let's go ahead and take a look at Tesla. If I had jumped in a Tesla straddle before earnings, I would have made so much money. So that's what I'm going to do on AMD. Again, I'm not going to use too much of my capital, just a small amount. I'm thinking maybe 2 calls, 1 put, 3 calls, 2 puts, 4 calls, 3 puts, or 5 calls, 3 puts, something like that, just before earnings. Earnings is, I think, Tuesday after market close. So on Tuesday, let's see, the 29th. Yeah, Tuesday. So Tuesday, right before the market closes, I'm going to buy at least 2 calls and 1 put, just a straddle, just kind of make sure I'm taking advantage of huge price movements. I really do think price is going to move large, but again, it's only going to be a few contracts because it's never a good idea to use too much of my capital or too much risk. Kind of stumbling over my words here, but I hope you understand what I mean. I believe, oh, wrong one. I believe that covers it for today. So thanks for watching Trade Journal episode 8, Road to 1 million. It's gonna happen. I feel it. It's gonna happen. Yeah, it's definitely gonna happen. Yeah, because we started off just going straight down, and it's flattening out. It's nice and flat, starting to curve up a little bit. It's a nice strong curve right there. So we just got to keep going in this direction. That's what we've got to do. We'll get it. We're going to start this week with $2,672.